Dramatic slowdown in the rate of property price growth. Property sellers are dropping the prices of their properties. At least that's what the headlines are screaming. So the question is, are property prices about to start dropping across the country, or is there something else happening? To answer that question, we need to go deep into the data. We need to look at what's happening to property prices across our country and what's happening to the various segments of our different property markets as well. So that's exactly what I'm going to go into in today's episode. Hello, it's Nero here, and if you're new to my channel, hit that subscribe button because I talk about all things related to the Australian property market and the economy. And let's begin by looking at what CoreLogic have to say about our property market. 3 capital cities record a fall in house values as momentum leaves the cycle. While headline growth remains positive, 3 capitals recorded a decline in values over the past 3 months, with Melbourne falling 0.9%. And if that's happening to Melbourne, our second biggest capital city, what could that mean for the rest of the country? Well, let's keep going. National home values rose 0.5% in July, the 18th consecutive monthly increase in home values nationally, a figure on par with the 0.5% increase recorded in June. So what that says is that property price growth is remaining consistent right now. Following a 7.5% decline recorded between May 22 and Jan 23, the National Home Value Index has gained 13.5%, and values have consistently pushed to new record highs since November last year. However, while the headline growth rate remains positive, it is clear momentum is leaving the cycle and conditions are becoming more diverse. And that is the key point. Conditions are becoming more diverse. As I go through this episode, you'll see that certain areas property prices are rising, certain areas they're falling, and you can't even say, hey, is Sydney a good place to buy or is Perth a good place to buy, as I'm about to share. 3 capitals recorded a decline in values over the past 3 months. Melbourne led the decline with a 0.9% fall, along a 0.8% and a 0.3% reduction in Hobart and Darwin values, respectively. And if we look at the latest Home Value Index chart from CoreLogic, what you can see is that Melbourne, Hobart and Darwin property prices are falling. Sydney, I'm going to call it flat. Then you've got Brisbane, Adelaide and Perth really rocketing along. If we look at property price changes over the last quarter, we can see again that Sydney is rising, Brisbane, Adelaide, Perth very strong, but Melbourne and Hobart really weak. But then if we look at over the last 12 months, let me bring you back to Melbourne, for example, it looks like property prices are essentially flat. So then how do you work out what's actually happening in Melbourne? Well, if you consider that prices are relatively flat, that means they've changed 0.2% in the last 12 months, but in just the last quarter, they've dropped 0.9%. What that actually shows you is that although for the last 12 months values are roughly the same, Melbourne is actually on a downward trajectory. That's why we're looking at both short-term growth, so what's happened last month and last quarter, and versus what's happened in the last 12 months to give us a sense of what direction certain markets are going in. We can see that the mid-sized capital cities, so Adelaide, Perth, Brisbane, all still rising very consistently, but some of the other cities are struggling. However, that doesn't mean though that you can just go and buy in any of these cities. Sydney, for example, has done quite well in the last 12 months. Prices are still rising, but that doesn't mean they're rising everywhere. Have a look at this. Here we have a chart from CoreLogic analyzing the different segments of the Sydney market and how much they've grown in the last 3 months. So you can look at this little code here, and what you can see is that certain areas in dark blue have grown 6% or more in the last 12 months. For example, we can see around Fairfield West, and these areas have grown a lot. But then there are certain areas that, for example, are in this sort of orange or red that are flat or even falling. So, for example, certain areas here around the inner city of Sydney and certain areas sort of close to Bondi have not done so well. So again, then, if you're thinking about, well, is Sydney a good place to buy an investment property? The answer is, well, it depends on where you're choosing to buy. That's one of the reasons why when clients come to us to use our buyer's agency services, we really focus on suburb selection. We focus on local council areas a lot more than just cities, because even in a market that's growing on average, like Sydney is, for example, as you can see, certain areas are doing okay, certain areas are struggling. Let's have a look at Melbourne. You can see it's essentially a sea of sort of pink or red, which means most areas are falling based on this code here that we can see. However, there are certain pockets in Melbourne that are relatively flat. Nowhere here though in Melbourne is really growing in value, which is one reason why, based on the data, Melbourne is not a market that I expect to see a lot of capital growth in, because even when we drill down to a micro level, we're not seeing that uptick that we want to for capital growth. Finally, what about the Perth market? We know it's been the strongest performing capital city market, but again, that doesn't mean you can buy anywhere there. When you look at this chart here, you can see, for example, that there have been many areas here that have risen quite considerably in just the last 3 months alone. However, there are certain pockets, Subiaco now, are essentially going flat. Just south of Scarborough, areas are starting to go flat. So again, even in Perth being one of our strongest performing capital city markets, you've got to look at things on a much more micro level. And to reinforce that point, let's have a look at this chart from CoreLogic, which looks at the quarterly change in values for the last 3 months to July, but it breaks it up into relative quartiles of property prices. So what we're looking for are the cheapest properties versus the more expensive properties. You can see in Sydney, the most expensive quarter of properties, so properties in the 75th quartile or more, they're actually rising the least. In Melbourne, they're falling the most. But then when you look at Brisbane, Adelaide and Perth, you can see that all areas of the market are rising, but actually it's the lower end of properties in those markets that are rising the most. I'm seeing it in Brisbane, Adelaide and Perth, where properties say below 800,000 or 700,000, there is a lot more competition. There's a lot more heat in those markets. That's why for someone who has a lower budget, if you're looking to buy an investment property for say $700,000 or less, there are still some great opportunities, but those windows of opportunities are closing quickly, because as you can see here, those are the areas that are rising the most right now. And even the mainstream media is finally starting to cotton onto this. How years of higher rates help the most affordable properties outpace the top end. Home buyers are turning to more affordable properties after 2 years of higher interest rates slashed the amount of money they could borrow. The strong demand has been pushing up prices for cheaper properties at a faster pace compared to more expensive homes. And we can see that here from this chart. Again, the data is from CoreLogic. The red line is looking at the lower quartile, the cheapest quarter of properties in each of our capital cities. You can see that the growth rate across all capital cities when averaged is higher for the lower end of properties than the more expensive properties. The bottom quartile of the market across Australian capitals grew 3.3% over the past 3 months, CoreLogic reveals. It easily outpaced the top quartile of properties over the same period, which grew 0.8%. So that means that if you were someone who went in and bought a property in the cheapest quarter of property prices in a capital city, you actually did better than someone who went out there and probably stretched themselves, paid the most they could to get the most expensive property they could, which is what a lot of investors do, and you have actually done a lot better by focusing on the cheaper end of town. I believe that's going to continue going forwards. I believe that property prices that are more affordable will continue to have faster rates of growth than properties that are more expensive because of affordability. We know we have a shortage of properties across the country. We know that affordability is being smashed. So therefore, more people can afford properties that are more affordable. It actually makes sense from a logical perspective if you think about it. That's why for many people who are able to do their due diligence or get the right help and can afford to get into a property for less than $1 million or less than $800,000, the odds are that you will do very well over the coming little while. but that opportunity, that window of opportunity is closing because property prices at the lower end are starting to really move, as you've seen from the data. And the longer you wait, the more likely it is that you will miss out. So if you want help to work out how to find the best areas to invest in, check out the link in the description below to get totally for free the audio version and digital version of my book. Otherwise, I'll see you next time.